Final hour session. We're going in a little bit late, starting around 3:34 today. Just finished up a live masterclass session for my daily profit play. Looming deadline tonight at midnight. Will the U.S. government shut down? Does the market even care? Let's find out. So let's say I'm going to check on our friends at Grok, a little AI action. When the U.S. government has shut down in the past 30 years, what is the S&P performance over 1 month, 3 months, and 6 months? Okay, let's see what a little AI action can dive in for us and find. So I don't think the market's going to care that much. Are we going to continue to melt up to new all-time highs? I don't know. I'm a little surprised that the market hasn't done much in the way of pinning 6,500. We came down a little bit. We came down to 65.70 right here. 65.70 right here. That was last week on Thursday. We had the 65.50 FOMC candle. Here we are getting back up towards, this is a 6,700 top around the FOMC. This is post FOMC. So you have FOMC right in here. This is where it was all messy. So I'm not sure why my drawing tool is not working. Whatever. So if you can see my cursor, this is the high and low during FOMC, a big noisy day candle. We gapped higher the next day, proceeded to get that 100% breakout candle and measured move around 6,700. We hit and we fell. So we ripped up here on Monday, Tuesday, and Wednesday and Thursday. Last week fell, still less than 2%. The market picked right back up where it left off. Positive gamma, didn't take out any major lows. These lows have not been threatened. This FOMC low has not been threatened or taken out. It came down to it, but it's still a higher low. It just is something we have to continue to watch. So I do have a couple pending orders for my daily profit play, some broken wings I put in today. If I'm looking to call that top, I'm looking to call the top around 6,800 to 6,850 and see if the market will respond and maybe stall around 6,700. Okay. Joyce says, what's pushing the SPY higher? I mean, honestly, I think it's just the fact that it's end of month, end of quarter, and these are the flows that I expected. The reason I got in today with a daily profit play dead zone is because I thought end of month, end of quarter, we're going to see some flows. And I was annoyed because it didn't happen at all. It didn't happen at all today until when? A breakout at 2:10 in the afternoon, and now the market is up, 18 plus higher than the breakout that I needed. So I was in here with I need a price to get above the box high or below the box low, and it finally got above the box high. So the trade we took this morning, daily profit play, is profitable. I did not take a winner. I ended up closing it out around 1:50 in the afternoon. During my masterclass, I just made an executive decision and closed it out for a small loss. I took an $80 loss. It was $80 to $85 loss. Now, the reason I also closed that is because I also have a 66.25 by 30 for my waterfall income that's worth $5 credit. And right now that's showing a pretty good profit. So this trade that I'm highlighting, I have the 30th, 25 by 30, 21.90. This maxes out around $407. So 21.25 minus 17.05, I'm up $420. That's max profit. So can I close this thing out? I mean, will it let me close out for 5.15? Probably not. I don't know why the broker's going to let me do that, but here's hoping. Yeah, greater than the width. So yeah, they're gonna close me at $5. See if I can close it at $5. Closing order. This trade, let me delete this. See if I can close it out at $5 and it'll fill me. So it's not going to fill me. It's going to cash settle at $5, which is fine. Okay, so this trade, yeah, we'll see. So now I just have the bear call spread that I rolled off to the 10th, trying to get price back below 66.40. Is there a pullback to that 50-day moving average? Can we pull back to 6,500? Does the market give a crap? Yes and no. Maybe it does. Maybe it doesn't. We do have some resistance here at 67. That's the all-time high. As we're coming into nonstop action from April's bottom, up in May, up in June, up July, up August, up September, 5 straight months of bullishness. And it's not just like these little tiny carves. Like September was a pretty solid push. In fact, I mean, September might even be challenging one of the best months of the year, which to me I find insane. I think June might be the best month of the year so far. Volatility all came in April. So April's clawback by the bulls was probably the most impressive rally. But once we turned the corner and we pivoted from, Doge and austerity to grow at all costs, let's just look at the numbers. So this is our May candle up 5%. That's a great May. Here's our June candle up 5.2%. So better in June. July, you can see a slightly smaller body up about 2.5%. This is through August. August was up about 2.7%. And September, that's quite the move in September. That is a 4.3% move for September. Wow. So May and June were better months, but September outpaced July and August. Highly unusual, but one thing I'm looking at for technicals, and I shared this out with some members yesterday, look at the data. So I shared this morning, 13 of the past 14 times, the S&P made new highs in September when it was higher at the end of Q4 or going into Q4. So since 1950 to now, 91%, that's 20 out of 22 times, being higher in September is a good sign. It just means path of least resistance. Okay. Would it be okay to sell the 66.85 by 90? Maybe. Let me see. We're trading at 75 right now. Let's see. It's trading at 7. Right now the 85 and 90 for 65 cents. I don't know. I did put in a pending bear call spread, but I put it at 67. So I'm not trying to step in front of this thing. There's little to nothing you can do at 3:40 in the afternoon. If you're right, you're right. If you're wrong, you're wrong. But where are we at? Let me go back to the 5-minute chart on my intraday levels. The market seems to be stalling out a little bit here at the highs, but this is not something I want to mess with in the last 19 minutes. If we are up to this 50% ATR, that's a 66.86. If I'm going to do a bear call spread, I want this thing up to like 66.95 or 6,700. If I'm going to sell a call, I want it to be up out of the way. Okay. So don't get too flirty with this 80 to 85 level, because this market might not stop. There's like 18 minutes. The market has made an entire run since 1:30 in the afternoon. This market is up more in the last 2 hours than it has been in the last 6 hours. So that's a very determined flow for the day. If this market is just like at all costs, we took out the highs, come hell or high water, let's try to get up to 6,700. So maybe it tries. So I'm looking at selling 6,700 by 05 and a 6,700 by 6,705. I've got a couple of pending orders there. Neither one have filled. They might not get filled. I'm not going to flirt with that 80 to 85 or 85 by 90. Yeah, I'm not. I just think it's a little bit risky on the day. Okay, all right, let's catch up. So, question that I asked AI. This is through Grok. So this is Twitter or X's AI platform. When the U.S. government is shut down in the past 30 years, what's the S&P performance over 1 month, 3 months, 6 months, and 12 months from the day of shutdown? Let's see what it says. Data source, Yahoo Finance, macro trends, other financial reports, cross-referencing with provided real-time data for the SPY. Caveats, U.S. government shutdowns vary in duration and context, and market performance is influenced by multiple factors. So obviously it's not just, hey, the shutdown happened. I don't care if the government shuts down. If it happens, it happens, but it usually doesn't mean much. So here's some interesting stuff. Shutdown in November 14th, 1995, the government shut down 6 days. Short shutdown due to budget disputes during the Clinton administration. S&P 500 start value was around 600. Oh, it's 10 times that. Crazy. Performance. 1 month, the S&P ended at 615, so a return of 2.5%. So 1 month out from the shutdown, the market was higher. 3 months out, the market was higher, up 6%. 6 months out, the market was higher, 11+%. 12 months out, the market was up 22%. So in 1995, the market didn't care. The market was in a bull phase during the mid-90s dot-com buildup, which likely drove positive returns during the shutdown. Okay, 1996, we had another shutdown, a longer shutdown, also under Clinton, with budget disagreements. This one was 1 month out, 0.8% positive. 3 months out, 4.9% positive. 6 months out, 8.9. I guess I'll just pull this over here while we're reading this. 6 months out, 8.9% return, and 12 months out post the day of the shutdown, over 20%. Again, similar to prior shutdown, the strong economic backdrop supported positive returns, though the 1 month return a muted possible due to uncertainty during the shutdown. 2013, a little bit different. Shutdown during the Obama administration, tied to the debt ceiling Affordable Care Act. We had the S&P at 1681, still up, positive. Okay, 1, 3, 6, 12 months out, it's still positive. The market recovered quickly post-shutdown, supported by strong corporate earnings, Fed policy. 2013 shutdown coincided with the debt ceiling debate, which may have increased short-term volatility. 2018, this one might be different. This one was negative. Oh, look at the backdrop, people. That's what I'm talking about, right? So we're at 2,800 on the S&P. Notice for those last 3 shutdowns to this, it's like the market's up from 600 to 2,800. Who cares about a shutdown? Keep your eye on the forest, not the trees. 1 month, 3 months, 6 months, 12 months. We're in 2018. This is under Trump. Negative 3.3, negative 5, negative 0.3, and then 5. Obviously, a lot of volatility. Over the course of a year, that wasn't a great 2018. Also, 2018 looked like this. We had a massive 2018 was a lot of volatility, right? 2018, the market did something like this. 2018 was, we had 2018, I'm trying to think, January was the volatility event. So the market dumped in 2018, end of the year, and came right back up through 2019 early, and then dumped again in 2019, came back up into 2019, dumped in 2020. So it just was a broadening pattern, crazy volatile stretch in the S&P. Where's my grok? Let's keep going. Okay, this period saw increased volatility with sharp market correction in February 2018 due to inflation fears, rising interest rates. That was a Volmageddon event because 2017 was literally all bullish every single month for 12 straight months. The S&P never had a losing month in 2017. It was crazy. Not just a shutdown, but we had a huge VIX spike. Returns were negative in the short term, but stabilized by 6 months. Stabilized, but still flat, right? Down 3, down 5, back to break even, still down 5%, 12 months out. Okay, 2019, longest shutdown in U.S. history under Trump, border wall funding. This is December of 2019. Interesting, look at the market. We were at 27, 26, 2,800, 2,670. Market's down to 24 by December of 2019. This is up 9%, up 17, up 22, going into what? Early 2019. This also was a backstop by the Fed. The market had dealt with, we had rates getting cut and the market instantly pivoted on weaker dovish policy. The market rebounded strongly after the shutdown with a 9.3% gain during the shutdown. The Fed reserves dovish policy in 2019 and strong economic growth. Growth drove significant gains over the 12 months. So we had a lot of volatility in 2018, broadening pattern, and 2019 was a Fed backstop. And that melted all the way up into 2020. That was why I was bearish going into 2020. We had COVID, and I was bullish through COVID simply because the market was literally offering, on a technical side, COVID's crash across the board was offering like a decade worth of discounts. And it happened in like 30 to 60 days. So, I mean, I talked about that in one of my sessions earlier today. One of the more, I'm going to say one of the more bold trading windows that I've had was during COVID, because everything was offering discounts galore, and all I did was allocate. I'll nibble here for $500. I'll nibble here for a couple $1,000s, and just spread out those bets. And there were so many, 50% gains, 100+% gains in 2020, 2021. It was one of the craziest, windows that I've traded in my career. No complaints. I mean, obviously, I wish I would have made a lot more money, but I'm sure everyone does too. It still was, you had the courage to buy anything during COVID, you made a ton of money. And I'm still at this point, like even with the markets up, it's like cautiously bullish. Okay. Let's see what else. So aggregate performance trends during shutdown, average return is still up. Okay, average return still about 4 to 5% higher for longer shutdowns. S&P fell 4 times, rose 3 times. So it's kind of a coin flip. Returns ranging from 4 to 9%. That's negative 4 to 9%. That's a pretty big variance. And stocks were up around 50 to 55% of the time during shutdowns with an average median of 0.3. 1 month post shutdown, average return is positive. 3 months positive, 6 months positive, 12 months positive. It doesn't really matter, but the volatility is there, right? A 12-month post shutdown, a range of 5% lower all the way up to 30% positive. I mean, that's crazy. And by the way, look at this freaking market. We have 10 minutes to go, and this market is just nonstop, man. Okay, I don't want to get burned. I don't want to get burned in the 67. So 67, I'm going to cancel. If it fills me, I mean, let me get something kind of wild and crazy here. Maybe a $4 credit. Like if I'm going to risk it, I'm risking something super small. And can the market rip up another 19 points in 10 minutes? Maybe. Maybe. But we'll see. So we just came up to tap the 50% ATR today, 66.86. And what's going to be interesting is by the end of the day, are we still within the market maker move? 61 to 86 plus or minus 25. That is literally textbook. We had a plus or minus 24, 25 in the day. That is literally textbook from the previous day's close to the plus minus on the day. Today's open 56 up to 86. That's a 30-point move. So we did exceed based on the open today, but previous day it's like right at the market maker levels. If we're going to get to 67, I'm not taking on a bunch of risk. I'm going to get this thing to, maybe this thing offers up. Let me replace. I'm going to keep an eye on this one. Okay, 67 by 67.05. So this is 6700 by 67.05. It's trading for 25 cents. I'm not that interested in taking 20 cents, but in the remaining 9 minutes, if we're up to 66.90, 66.95, maybe I can sneak in a lucky $1 or $2 out of this trade. Maybe. If we're gonna act on it, it's got to be quick. I might not get filled on it either. So if this is offering over $1, I might take the bite. Otherwise, I'll just see if we get really lucky to fill. But most impressively, let's just clap the markets on, right? Let's just applaud the markets for its effort to refuse any and all drama and just go higher. It just doesn't care, man. And this is positive gamma. I keep talking about this stuff, positive gamma. We are in a perpetual positive gamma environment, which means every put is sold and every call is sold. And this is why this market continues to not go down. Positive gamma means melt up. Doesn't mean blast off, doesn't mean rip, but melt up. We've been seeing it for a while. Pfizer, yep, I saw that today. That's big news. That's good. The healthcare space was really solid today. I mean, Pfizer would be a great stock to see it turn the corner for the first time in a while. I hold shares of Pfizer with the cost in the low 20s. And, a lot of that's just selling call options, but I'm trying to get this thing just uncovered and see if we come up into like the $28, $30, $32 zone. Fair value on Pfizer should be like 35 to 40 bucks. So discounted cash flow, 12 times earnings. I mean, fair value at 67. I'm just trying to get this thing into the 30s. You can see I've got a big fib drawn on my chart. This high, this low. If we pull back to the 23 or 30 or 38%, those price targets are $32 to $36. I would be pretty happy. I'd be extremely happy, actually. From this level here, I will be a happy trader. Why? Because that would be about $12 to $13 a share. And I think I have over 1,000 shares right now, Pfizer. I also have some diagonal spreads that I'd start selling calls against to make sure I can protect the profit. We're now up to 66.90. It's still offering 25 cents on the 5 wide. It's not enough to take the bait. Don't take a sucker fill on this thing. That 68.25. This is out to next Friday. This one might get filled. This is a broken wing that I talked about in my masterclass today. That might get filled. That's over 6,800 though. Cursor. We talking some AI stuff? Yeah, Cursor's for coding, yeah. Code editor. So if you build indicators, build robots. I mean, I've used it. I've used Perplexity a lot for typing in code as well. But I mean, ChatGPT can type in codes. I built indicators on ChatGPT. You can experiment. I usually am happy about like 80 to 85% of the way, and then I want an actual like developer coder to kind of look things over. But yeah, Cursor's been nice. Perplexity's been nice. ChatGPT does fine. There's ways to get the job done. Yeah. Okay. Been a lot of 3-year break while the rest of pharmaceuticals have been tariffed. Yeah, I don't know, man. Probably because Donald Trump's on a bunch of Viagra. Just kidding. No, I don't know. I mean, technically speaking, I've been waiting for Pfizer to kind of get its crap together for a while. I don't know why the stock is down, 60+%. It's down 66%. I mean, it is a non-correlated, low beta, 7+% dividend cash cow, but what a discount. So, I mean, I've had some more exposure and some more puts. Let me see what else I have running on Pfizer. So for all accounts here, Pfizer, I mean, I just bought a bunch of shares. So I have a diagonal spread that is out to summer of next year. It's a $20 call. It's still down from what I paid on it. But if we get a decent run at the end of the year into 2026, plus the shares, I just thought, not a bad spot to allocate. I bought the shares at $24.50. I'm not selling anything against it. If I'm going to sell covered calls, this was also one that you don't get a lot of premium if you're selling calls. So if you're going to sell calls, it's pretty much when you're like, I want to let this stock go, get me called away. Right? So if this thing rips up to like $34, $35, I'll sell probably a $34, $35 covered call and try to get it called away with a bit of extra premium to kind of juice that profit at the end. But I'm not looking for like a buy and hold here. If this thing pulls back to a Fibonacci level that I have, 32, 34, 36 and change, I'm taking profit in here. I might not cover it at all outside of maybe a week. I'm not looking like it doesn't juice your premiums a ton on selling covered calls. And it also might take the time to do this. It might just trough out for longer and then eventually it breaks out. Maybe we get back to 50%. This could be a pretty good spot. If we came back to 40, right? That's a 50% pullback zone. Do we get there? That's not a bad trade. But, now is not a bad time. I mean, in fact, let me look at a ratio spread here. I don't know if it's going to offer a good premium, but that is a 2021. Let me see if I can do something here on Pfizer. If I go out to, let's go Pfizer, maybe out to December of next year, 23 by 20, I'd be willing to take on another chunk of shares. This is the problem with like such crappy premium. If I do a ratio spread of 23 by 20, it just doesn't offer nearly as much. I'd have to do something like this. I could own shares at 23 minus a $2 profit trap. This actually wouldn't be terrible. 23 is the assignment price minus $1.08 and minus a $2 profit trap. Oops. It'd be under 20 bucks. I'm going to do this trade here. If I can get $1, I'm going to take this trade. I've got 2 minutes. I might just put this on the radar for tomorrow. Pfizer. Let me see if I can get this trade to fill. A 25 by 23. $1. Let's see, $1.10 maybe. $1.10 is not filling. $1.08 is just below the mid price. $1.08 just got filled. New trade coming in for, see if I can sneak these in here. So $1.08 not filling. I'll try dollar. I could probably get filled at $1.05 in all these. $1.07. Let's try $1.05. Filled at $1.05. Okay, I'm going to try to get a couple of these in before the close. $1.05 just got filled. Let's go this account. 2. Okay, a couple more. Okay, just hyper focused here. A couple more. Filled. That was 2287. I go, okay, a couple more accounts, see if they'll fill me. So 1904. All right, I'll get these in by tomorrow. I'm getting filled for $1.05. I'll put this in Project Options Edge. $1904. Okay, so I'm going to make this official for Project Options Edge right here. New trade, Pfizer. I'm going out to December 18th of 2026. So that's a stretch, but I'm doing a buy at 25 and a sell at 23. $1.05 credit. This is a ratio spread, and I'm willing to own Pfizer shares if price is less than 23 by expiration. Break-even price would be, so 23 is the assignment, minus 2, minus 105, $19.95. And that is a strong low to own with a solid price target between 32 and 36, and potentially 40 for a 50% retracement of the latest decline. All right, trade is in. Okay, so new trade in Project Options Edge, and I'll put this in. Pfizer. That is a 12/18 expiration. Buy the 25 put, sell the 23 put. $1.05 credit. Willing to own if assigned less than 23. Break-even price is 19.95. Okay, probability of profit on that trade. I mean, there's a chance of assignment. There's about a 70% chance of profit. Assignment risk is maybe 20% chance of assignment. But with a 7+% dividend, I think there's upside potential. We'll see if it responds. I mean, again, maybe I'm too early. Maybe I'm too early. If this is wait for some type of, I don't know, some type of falling wedge, like maybe it's just not ready yet. But I'm taking the chance, getting in early, giving it some time. See if the market is going to turn the corner on, healthcare a little bit. This stock is beat up quite a bit. Value wise, like I said, fundamentally, I don't mind it. I mean, we're trading 12 times earnings and discounted cash flow with a 7% dividend. I think there's, I don't know. If we have some heavy rotation away from AI and tech, I think healthcare gets a lot of love. If we're going to make, drug costs cheaper, direct consumer, I think Pfizer should get on board with that. I've said here for months, like they need to get on board selling Ozempic, and Pfizer's probably going to rip to the upside. They need to make their own. If they can make their own Ozempic, they could probably rip to the upside. So if we get something, creative along those lines, they switch gears into like diet and weight loss, and all of a sudden this thing's up to, $40-$50. It's like, I'm not trying to cover the shares that I own. Ratio spread is income. Shares I own could rip up and we can recover very quickly. And who knows, maybe a $24 ownership price gets up to $50-$60 and flip it, flip it for a big fat winner. Okay. All right. Anything else for the day? So overall, nice way to finish out the month and the quarter. I've got some fresh highs on the day, up across $600 or 600,000. Not bad. So I was at 589 this week as the year-to-date high. Now it's at 6. I will take it. I will take it. So let's do September 30th. Year-to-date highs. Could certainly be worse. Embrace the melt up, ladies and gentlemen. I think it's not going away. I do expect some volatility in the near term, but I've literally been talking about this for a month. It's been driving me crazy that the near-term volatility just refuses to give us anything other than a couple of percent. A less than 2% pullback is not a correction. I'm sorry. It's not a correction. Okay. And either fiscal policy is so dominant that this market is just going to break everything. Technically, if we are breaking, we are going to go bubblicious to the upside. We are going to get 120, 130, 140 bars away from the 50-period moving average, get 300, 400 points. I have no idea. But if we just go sideways, 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 here's the next key level. If the market cracks below this 21-period moving average, it has room to fall to the 50. It has room to fall to 100. This is what you have to watch, right? If it doesn't break below this 21-day moving average, the bears are worthless. So enjoy the melt up. And it might keep testing the 21, testing the 21, testing the 21. If we go sideways, all it has to do is break the floor. But I just want us to be mindful. If the market breaks below the 21, 21 to 50 comes fast. 50 to 100 comes very fast. That's what we need to be cautious of. It can happen. I'm still waiting to buy dips. But right now it's like, I just want to see if the market can kind of stall out here this first week of October. I'd love to see a 5% correction. I'd love to see a 10% correction. I just know that it just refuses, but we're sitting here just off of all-time highs, right at the end of the close. And, 67 is the all-time high. We're at 66.88. That's not a bad September. Now we come into a little bit of a reality check in October. There's a pretty good window of weakness plus technicals. I think near term, we got some weakness. I hope we get it. Okay, let's test the 21 again. Let's test the 50-day. Let's get this crap over with so we can buy the dip instead of what is my least favorite, which is there is no dip. The market goes up, 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 gets further and further overextended. And then when it does come down, now it goes lower. That's what's going to happen. If this market doesn't have some type of ventilation, it's going to crash more aggressively. So, at some point I'll literally be talking about, look, I gotta sell calls at these levels, or I've got to buy puts at these levels because this thing is getting ridiculous. But I want to see what literally the next couple of days give us. We're starting on a new month. The JP Morgan Collar trade, I'll talk about it tomorrow. We'll look at the deltas. It's going to be like a 10 to 20 delta tomorrow morning when it's officially October 1st, and we'll look out and trade to the end of the year. So there should be another JP Morgan Collar trade. We can probably find it on some gamma levels if you look out through unusual whales or what I have in my dynamic trend software. If I go out to the end of the quarter, let's see what we have in the big picture. But I'll talk about that more tomorrow during my daily profit play. We just finished up a great 2-day workshop on daily profit play. Tomorrow, I'm hosting a live trading session at 1 p.m. Eastern time for Pinch Point Scanner. We'll do a combo masterclass and a live trade session. Project Options Edge issued a new trade, actually a couple new trades this week. I just posted that one on Pfizer. I took a trade today on DraftKings. And then last week I took a trade on XLU and some GLD SLV positionings. We took some profit on Lyft, so it's been good. We have like 26, 27 winners. We've only had one loss on Project Options Edge. It's all been good discretionary trading and high win percentages. So, all right. I'll let you go come back and do it again tomorrow. Tomorrow morning, all are welcome to join. Here's a link to join me if you want to trade with me daily profit play, 9 a.m. Eastern time. Tomorrow is Watchlist Wednesday. I'll pull up my scanner and dashboard, and let me find the link if you'd like to join me. So link to join me. Post this in the chat. This is Lee. I thought you had, didn't you ask that question already? Yeah, I mean, I don't know, man. Special treatment. I mean, there's a lot of cronyism going on in DC right now. Let's see here. Daily profit plan, live sessions, weekdays, 9 a.m. Eastern time. Okay, if you'd like to join my Telegram is here for you to join. There you go. Okay. Discord. Got Discord as well. Discord's connected to my YouTube channel, so when I go live, I'll share that. So let's go to Chris Pulver Trading. I'll post a 30-minute link. And then I'll let you go. Okay, that link is good for 30 minutes on Discord. Am I in Tesla? Yes, I've been in Tesla since March and April. So in Tesla, I bought shares back here in April. I bought shares over here in July and August. Technically, was looking for this to be like a bit of a head and shoulders. So we had, this high, this wedge, and kind of down, up, consolidation, and then heading back up. This is one of the Mag 7s I thought we can get to all-time highs again. So I've been long Tesla for that trade. So I'm still holding trades from here. I've rolled Tesla. I have some shares that are, in the money covered calls. I've got it rolled up to like 340 and 350. I've got some that are running uncovered, and I'm going to try to take that profit up to like 480 to 500. And if I just sit on Tesla, then, give it time. It's probably going to be volatile, but I think we get to $1,000 again before we have some splits. So, but yes, I'm in Tesla. And I was surprised to see so much love on Tesla and then so much hate on Tesla. And it's kind of a perfect example of what the stock has dealt with its whole life cycle. People either love it or hate it. So anyway, so Lee, back to your question on Pfizer. I don't know why, they're getting treated differently, but I would say for the daily candle, good. It's kind of nice that there's tariffs, and yet this is actually behaving the right way. You look at, something like Johnson & Johnson. Pharma should be up in a pretty big move today. Let's go to the heat map for today. Look at healthcare. Healthcare is glowing green, which I'm super happy with. So Pfizer up over 6%, Johnson & Johnson up 2%, Merck and AbbVie. This is Amgen, Eli Lilly, all up. Gilead is down. Interesting. But yeah, healthcare space is good. The one shining Mag 7 today is where's Tesla was flat, 0.35, Apple flat, Microsoft flat, Palantir up 2%, but NVIDIA all-time highs, 186, 187 all-time highs. Pumping those chips, pumping this AI play. Probably why the market rallied like it did. So, all right, come back and do it again tomorrow. We'll be live 9 a.m. Eastern time for Watchlist Wednesday on the Daily Profit Plan, and all are welcome to join. Thanks for being here today. Kindly hit that thumbs up button, like and subscribe, all that stuff. Support the channel. That's about the best thing you can do for these YouTube channels is just like the content. If you click the thumbs up button, this video, when we go live, or the videos that I post, will get into those feeds where people are looking for financial education, live trading, analysis, technicals. I mean, I'm out there on TradingView, I'm out there on Twitter and X, I'm out there in Discord, I'm out there in YouTube. I'm just trying to help people trade. Cool. So all in on sales tomorrow. We'll see. I mean, it didn't really go much further than we hit the, I'm going to take a screenshot of this. So we ended up closing the day just above the 50-day moving average. I'll take a screenshot here. So this is copy link in my daily profit play tracker. So this is the link for today. Close price at 66.87. So nothing burger for most of the trading day, despite end of month and end of quarter. But the directional flows came alive after 2 p.m. Eastern time, and the market ended up reaching the 50% ATR up level on the day. So let's wrap that. Nope. So just making some references here where, I want to take a look at my indicator. This is where the day started. If you're following my mouse here, this is where the day started, right in the middle. It was just a total chop fest for most of the day. And then after about 1 p.m., market started rallying back up, broke the highs around 60. Once it broke the opening bell range, got above 60. All of a sudden, we're at 65.70, 75 to 80. Got all the way up to poke above 90 for a second, but settled in near the highs of the day. So if this was a 100% ATR or 150 ATR, then yes, I'd be more likely to sell going into tomorrow. But we're not. Like, this was just a directional push. I think a lot of times the market is capable of hitting a 50% up or down move. And it did. So good stuff. Okay. Thanks, everybody. Come back and join me again tomorrow. Take care. Bye.